Hey everyone, welcome back to Currency Revalue, your number one source for breaking updates on the Iraqi dinar, global currency shifts, and the financial stories that matter to investors like us. Today, we're diving into fresh numbers out of Baghdad and Erbil, where the US dollar exchange rate against the Iraqi dinar has just taken another dip. These aren't just small figures on a screen. They're signals, hints of the pressure building inside Iraq's currency system, and possibly a preview of bigger moves on the horizon. Now let's set the stage. On Sunday, the dollar slipped in Baghdad's two most important trading hubs, Al-Kifa and Al-Harithiyah. Earlier in the day, you could trade $1 for about 14-16 dinars. By the afternoon, that number edged down to 14.5. Just a tiny shift, maybe. But in currency markets, even these small fluctuations can ripple outward, affecting shops, investors, and even household budgets across the capital. And it wasn't just the exchanges. Across Baghdad's currency shops, the rate spread out between 14.05 and 14.25 dinars per dollar. That range tells us something important. It shows how unstable or inconsistent the market still is. Imagine being a shop owner trying to import goods when the rate you get in one part of the city could differ by 20 dinars from another part. That uncertainty eats away at confidence in the dinar. Let's turn north to Erbil, the capital of the Kurdistan region. There, the dollar also weakened slightly against the dinar, trading between 14.10 and 14.10.5 dinars. That may look almost flat, but the fact that Baghdad and Erbil both moved downward in sync suggests something coordinated, not just random local noise. To really understand why this matters, we need to rewind. In February 2023, the Central Bank of Iraq made a big call. It officially reset the exchange rate to 1,300 dinars per dollar. That was a bold move, designed to strengthen the dinar and reassure citizens that Iraq was serious about monetary reform. Before that, the official rate had been stuck at 14.50. But here's the kicker. Even with that official number, the parallel market, what many call the street rate, was often much higher. We saw levels of 15.50 to the dollar, sometimes even worse. Take January 2023 as an example. The CBI insisted that the rate was 14.50, but in the streets, the real price people were paying was 16.10. That's more than a 10% gap. Think about that for a second. A country's official rate is supposed to anchor confidence. It's the foundation for trade, imports, salaries, contracts. When the street rate drifts 10% or more away, it's a red flag that something deeper is wrong. Fast forward to today, and these fresh declines: 1,414.5 in Baghdad, 14.10 in Erbil, look small on paper. But in the bigger picture, they could represent two different stories. One, it could be a sign of stability, the dinar clawing back some ground, pulling the market closer to the official 1,300 number. Or two, it could be a temporary fluctuation, masking the deeper struggles of a currency that still hasn't locked into a firm position against the dollar. Here's why investors are watching so closely. Every single movement in these rates reflects pressure between Iraq's official policy and the reality of its markets. The central bank can set a number, but traders on the ground, importers bringing goods, and everyday Iraqis exchanging currency tell the real story with their wallets. And right now, that story says the dinar is hovering far above the 1,300 official target. Let's play this out with an example. If you're a trader in Baghdad buying US goods, a shift from 14.16 to 14.14 might not seem like much. But multiply that across millions of dollars in trade, and you're looking at meaningful differences in cost, profit margins, and ultimately consumer prices. For the average citizen, these differences hit home in food prices, electronics, even fuel. And don't forget the psychological impact. When Iraqis see the dollar drifting lower, even by fractions, it signals that the dinar is gaining strength. That can boost confidence. But if the trend flips the other way, if the dollar suddenly spikes, it triggers panic. People rush to buy dollars, draining liquidity and driving the street rate even higher. It's a delicate balance, and the central bank knows it. This is why the February 2023 move to 1,300 was such a landmark. It wasn't just about numbers. It was about sending a message that the dinar was being defended. But the gap we've seen since then, between 1300 officially and 1400 plus in practice, shows that the job isn't done. Every small decline like today's hints at progress, but also reminds us of how far Iraq still has to go. So where does this leave us? The central bank is in a constant tug-of-war, trying to hold the official rate steady while the parallel market tests its resolve. Baghdad's drop to 14.5, Erbil's to 14.10 might look like ordinary fluctuations, but for those of us watching the revaluation story, they are breadcrumbs. They're signals that tell us whether Iraq is edging closer to true alignment or if we're stuck in the same cycle of divergence. For investors holding dinar, these updates matter. They shape the timeline of when Iraq might finally take the next big step, whether that's deeper reforms, stricter enforcement against black market trading, or even the long-awaited revaluation that so many believe is inevitable. At the end of the day, what we're seeing is a currency under pressure but still moving. The official story is 1300. The street reality is over 1400. And every tick between those numbers is a test of confidence in Iraq's economic future. So stay tuned, because as small as these moves look, they could be the first cracks in the wall or the first steps toward a stronger dinar. And here on Currency Revalue, we'll keep tracking every rate, every shift, and every signal, because this story is far from over.